Hi, everyone. Good afternoon. It is my great pleasure to welcome you to the 15th Annual Economic and Political Outlook for the Americas. My name is Camila Maldi, and I have the privilege of serving as a director at the Canadian Council for the Americas and as a lawyer at Dentons Canada. On behalf of both organizations, I want to thank you all for joining us today for what promises to be an insightful and thought-provoking discussion. This event has become a key platform for business leaders, policymakers, and experts to assess the evolving political and economic landscape of the Americas, a region that continues to shape global markets, investment strategies, and policy decisions. The Americas stand at a critical juncture right now, with dynamic economic shifts, political transformation, and emerging opportunities in sectors from energy to technology. Staying ahead of these trends is more important than ever. This is precisely why today's discussion is important. At Dentons, we are proud to play a role in facilitating these conversations. As a global law firm with the largest footprint in Latin America and the Caribbean, we understand the complexities and opportunities of the region, and we are committed to promoting and defending our clients' interests in there. Likewise, in the Canadian Council for the Americas, we are dedicated to fostering dialogue and engagement between Canada and Latin America. We believe that strong relationships, informed decision-making, and a strategic partnership are key to sustainable growth and prosperity across the region. Today, we are honored to bring together a distinguished group of speakers and experts who will share their insight on the economic and political outlook for the Americas in 2025 and beyond. We encourage you to take full advantage of this opportunity, engage, ask questions, and connect with the fellow attendees here. And once again, thank you very much for being here. We look forward for a dynamic and fruitful discussion. Thank you.
Thank you so much, Camila, and welcome everyone. My name is Marta Blackwell. I'm the Vice President for the Canadian Council for the Americas, and it's my pleasure this year to actually be joining the stage to co-moderate with our President, Ken Frankel. I'm just going to start off by introducing our esteemed panelists. We have next to Ken, we've got Jonathan Hausman, Chair of the CCA and Chief Strategy Officer at Ontario Teachers Pension Plan. Next to Jonathan, we have our new panelist, Ulla Pentimpuro, and she's a principal of Compliance, Forensics, and Intelligence at Control Risks. We've got John Price, Managing Director of America's Market Intelligence, and Eduardo Suarez, I'm sorry, I always forget this title, Vice President of Latin America Economics at Scotiabank. So with that, I'm going to hand it over to Ken to get us kicked off.
Thank you.
You don't have to do it.
You will do this. Oh, thank you.
It's automatic.
Yeah, the older I get, the more help I need with the microphone. It's remarkable. Thank you, Marta. Thank you, Camila. Thank you, Dentons. You always make a wonderful presentation. Set the beautiful platform for us to have this. And welcome to many people we know who will be watching the video of this from throughout the Americas and even parts of Europe. It's customary to start off this conversation every year with a review of what's gone on in the past year. A few things have gone on over the last, and I don't even think we're not actually going to go through it that way. We always traditionally as well do a country by country analysis. We're not going to quite do it that way this year either. We're trying to respond principally to the questions that we get asked often by our stakeholders, broad base of stakeholders, about what we think is going on in the hemisphere, the seismic shifts that are still going on and certainly haven't settled, and how that will affect Canada in various ways. And so we're reformatting it this way this year to try and respond to those questions and to the changes that we all know are going on around us and will continue to go on for some time. So with that, I'd like to call on Jonathan first to talk about where he thinks Latin America is situated in the world, given that the world has moved essentially to a mercantilist point of view. We're in the midst of an innovation war, if you want to use that bellicose term, and obviously extreme resource nationalism. Within those factors, Jonathan, what do you want to say about where Latin America sits?
Sure. Thank you. Thank you very much. And welcome to everyone. And thank you very much for coming. So I guess the important thing is to mention that the global system is rapidly changing. So we've had conversations here at this event in the last number of years, and we took this view that within the certain assumptions that we all carried, who is going to win, who is going to lose. I actually think we need to rephrase. We need to reframe that discussion. The system, the global system, is now moving rapidly towards, as you've indicated, Ken, towards a neo-mercantilist system, and that's a fancy way of saying might makes right, and economy comes after politics. And in that kind of world, and in a world where that is punctuated with a very large aging exclamation point called Donald Trump, it is extremely important for this region. So in that context, I'd like to make a few observations. The first is that the winners and losers are defined more now by how resilient you are in the face of that mercantilist system. So it's good news, I guess, or reasonable news for countries that are big, don't rely hugely on their external accounts, and are able to play both sides of the street effectively, the poster boy being Brazil. It's not so good for smaller countries that are deeply integrated into a withering global trading system that the administration in Washington does not believe in, and has a very large reliance upon open tariffs, aid, and various other accommodations from the United States. The poster boy for that would be Panama, a country that is being pointed at as you are too close to China. You've got $2.5 billion of FDI, the largest amount of revenue other than the United States for traffic through Panama is China, and we're going to punish you. So that's the first frame. The second frame is there are a lot of big countries, actually, or relatively big countries, that have relied upon the outsourcing phenomenon. Colombia comes to mind. Mexico comes to mind. Costa Rica comes to mind. And in those countries, there is this very, very powerful sucking sound back to the US of these kinds of jobs, not because they will be jobs fully employed by Americans, but because they're jobs that will be replaced by automation, and particularly by the advent of artificial intelligence. But that will take place in the United States. So that's a very negative force as well. So there's also a macro dimension to this. Trumpism is about tariffs. It's about, in my opinion, higher inflation and higher interest rates. And so generalized across all emerging markets, but the ones we're focused on here in LATAM, that is not good news, even for the bigger countries like Brazil. The last point I want to make is, though, just in case I've got you very feeling down in the mouth, is, there is a closet filled with dirty shirts in the global emerging markets. And it could well be that there are a number of countries inside Latin America that are the least dirty of those shirts for investors like ourselves and other emerging market investors. Why? Because if you are in emerging Europe, you've got a security problem. If you're in a country like Moldova, you're not worrying about the trading system. You're worrying about whether Putin decides that he wants to have you for breakfast. If you are in certain parts of Southeast Asia, I would say an increasing portion of Southeast Asia, you are concerned about this crushing sound between being ground between the US and China, and the domination that increasingly China is experiencing. A poster boy for that is Indonesia, where it's about the minerals, stupid. And if you're in South Africa, you're much more worried about a decline in institutionalization and essentially everybody forgetting about you, except Russia, with friends like those. So actually, I think there is optimism, but it's going to have to reframe entirely within the new political economy, and some will win and some will lose, but there will be winners.
Thanks so much, Jonathan. We're going to change track now and go a little bit more to something a little closer to home and bring it over to Eduardo. Eduardo, as VP of Latin American Economics at Scotiabank, your clients must repeatedly ask you, what is the future of NAFTA, CUSMA, TMEC, USMCA, whatever we want to call it? And the agreement is obviously up for official renewal in 2026. All three governments must reapprove the agreement, and the jockeying has already begun, as we're all aware in this room. What is your take on that? What do you think that renewal is going to look like? Where do you think that conversation is going to go?
Thank you. I guess there's three potential ways it can go. The one I see almost zero probability is Trump uses Article 34.6, sends a letter for the 6-month notice and terminates it. The most important thing there is reality. The importance of Canada for states in the north and center of the U.S. and the importance for Texas of Mexico is ridiculous. Even though Mexico only accounts for about 1% of U.S. GDP in the trade relationship, and the flip side of that is a 30% relevance of the U.S. for Mexico. The reality is of that trade Mexico has over 80% is with Texas. And the strategic importance that Texas has in U.S. logistics, in energy growth, and even within the Republican Party, I think, means that that option is out of the table. The second option is we go into a scenario where the U.S. does not re-ratify NAFTA, and then we go into a 10-year period of annual revisions. That has advantages from some certain perspectives for the U.S., but also very serious disadvantages, particularly in uncertainty. Nobody loves operating in an environment where the rules of the game change every year, and the amount of companies that are strategic for the U.S. but have huge dependency on Mexico and Canada is very relevant. The third scenario is that we have a revision is potentially going to be accelerated. I think there's a lot of changes to the agreement on the table that would reduce the impact of China's investment. No, I don't think across the board. I don't think the U.S. cares if Mexicans or Americans are buying tennis shoes or T-shirts built in China, but I think the importance of strategic sectors such as chips, telephones, and all those things will play a key role in the re-ratification. But I think ultimately the strategic importance of the North American partnership will play a key role. I think the last 2 years I was one of the negative views on Mexico and nearshoring. I tend to change hats from time to time, from going from Perma Bull, a nickname I had in Canada a few years back, then became a Doom because I was kind of the gloomy one. I think I'm once again going to the more optimistic side because I think the importance of the trajectory of the integration is key. Mexico in the year 1990, before NAFTA was signed, exported roughly the same amount of manufacturing as all of Latin America combined. Today it's 3 times the size. And that trade is over 80% with the US. So I think we're going to have a bumpy year, but the reality is nearshoring was just a nickname that a long-term process was given, and when we got too optimistic about it, we're probably set for a downfall. Now that people are getting very pessimistic, we're probably going to have the opposite play out.
If I can.
Can I just add one
please
point
go
to
ahead.
that? There is a fourth scenario that is actually been in the works for almost a year now, and that's the Americas Act, which is a bipartisan legislative initiative designed to essentially take the boilerplate of the USMCA and add on additional countries in Latin America. And the whole premise is built on an anti-China strategy. So if the U.S. needs cheap labor, it needs cheap resources to compete with China on the global stage. So rather than breaking up USMCA, we should actually add to it. And it would be with, to Jonathan's point, it would be with politically aligned actors like the Dominican Republic and possibly Panama. There's $70 billion on the table to provide incentives around nearshoring, making sure that whatever new investments arrive work their way into the U.S. supply chain and not a Chinese supply chain. And it would be predicated upon Mexico really cleaning up the sort of many cases of dubious Chinese investment in the last 36 months that basically use falsified certificate of origin documents to make their way to comply with the minimal content rules. So there's that at play. It's obviously not being talked about right now, but I think it will gain voice if after February 1st tariffs are raised.
Great. I'm actually going to invite someone from our front row here. We have the pleasure of having Eric Miller with us from the Rideau Potomac Strategy Group. And we're going to actually ask him to speak a little bit to this question, particularly on the trade issues that are being brought up. And what exactly, you were in Ottawa yesterday, Eric, and you've been in DC speaking with people at USTR. So if you could sort of speak to what's happening on that file from your perspective.
Of course. Good afternoon, everyone. My name's Eric Miller. So this weekend, according to the latest statements from the White House, Canada should expect and Mexico should expect to be hit with 25% across-the-board tariffs. And so one of the scenarios about the future of USMCA could be we live under a long-term scenario that is a total and complete violation of the spirit and the letter of the agreement. And so then it just falls apart. For its part, Canada is in the process of developing retaliation strategies, not just lists of tariffs, but other ways that it can prevail on the United States to reconsider the course of tariffs that it is pursuing. You will see very significant effects, particularly in places like the Midwest, where the calculations from Natural Resources Canada are that the price of gasoline will go up 75 cents a gallon because oil from Alberta has to pay a tariff when it's coming into the refineries in the Midwest. Now, this is going to put great pressure on the Canada-Mexico relationship. We've seen statements from Premier Ford, Premier Smith in Alberta, and others about skepticism toward Mexico. And it may well be that we end up this year with an ending of the trilateral relationship. That is a very real possibility that has to be considered. What also you will see is that Canada is, for the first time, truly being forced to grapple with what it means to pursue trade diversification. Since the current Prime Minister's father talked of the third option in the early 1970s, people said, kind of like somebody who, wants to run a marathon but never actually gets on the treadmill. I should get to that. So we're going to have to get on the treadmill. We're going to have to get in shape. And I think one of the interesting possibilities is that trade between Canada and Latin America actually finds new life. Canada does have free trade agreements in the region. It has no intention of abrogating trade agreements with Peru or with Chile or with Colombia. And so the question is, how does one do it? And there's also beginning to be some thinking around how do you actually build deeper, enduring relationships? The U.S. market is not there anymore in the same way. The past that we have seen is ending. The bridge is being raised across the canyon. And so now it's about figuring out how do you build a new relationship. And Latin America, given its population size, its proximity, and a variety of other factors, should be a good destination for one to look at. Obviously, it comes down to a project-by-project basis. You'll see a lot in natural resources, but food and services trade and other things of that nature are going to be really important. So if I have to offer one hopeful possibility is that, well, the old model, which has made Canada a prosperous country, may be going away to some extent. There'll still be lots of trade with the U.S. regardless. The promise of trade between Canada and Latin America may have to be realized because there's no choice. And when we're here next year, Ken, I hope you have double the room space because there'll be that many more people engaged in the region.
Could I call it Carlo Dade now, who's at the Canada West Foundation, who's looking at this with the Western Canada point of view? From the full Canadian point of view, of course, but a specialization in Western Canada. Let me say that.
From the part of the country that matters the most, right? Sorry, it's part of my current job description to slip that in every time I'm back east. So yes, I'm with the Canada West Foundation, but next month I'll be with the School of Public Policy at the University of Calgary. We're setting up a new international center there, and we're working very heavily on North American relations. So just a couple comments in regard to what the panel said. We've done a lot of work at the Canada West Foundation, not necessarily on understanding Donald Trump, but on understanding the America First movement, the coalition of think tanks and others who are working to build policy for the Trump administration. We've been on this for a few years. I would just note, when thinking about Donald Trump, there's also a need to factor in what he didn't have last time, a coalition that had done work and has worked to support his campaign in more visible ways that were present last time and have expectations for what the administration will deliver. So you have folks with more visible claims, especially on the front of tariffs. One of the reasons we didn't see the announcement on the day of the inauguration was this group is still fighting amongst itself in Washington over what of the 4 or 5 different variants of tariff policy should come out. So expect to see a lot more of this infighting. With the first Trump administration, we started with Wilbur Ross running trade policy and then wound up with Lighthizer. So we're going to be in for a period of, I think, high uncertainty with the administration because of this new dynamic coming in. The second thing about that point is we don't understand their framework and philosophy for thinking about economics. It's not the same language we use. It's not the same thinking that we use. We know that it's different, but you look at the discourse we use to engage the Americans, we don't have the contacts with the America First movement to really understand this different thinking and framework. We have a bit from Lighthizer, but it goes deeper and further. There's a retooling of economic theory on the new right in the US, and that's really going to impact us on Canada. So until we get our minds around that, we're going to continue, I think, to struggle. The last point on the CUSMA, TMEC, USMCA, there's a question as to the real value of the agreement for Canada. The agreement was supposed to give certainty for trade. And obviously, the USTR created a new category, a modeling component for the economic modeling of the benefits of CUSMA, and that category was certainty for digital trade. Well, we've seen what's happened to certainty and projections of certainty under an agreement that the Americans have overturned twice and are threatening to do again. So the last point is new modeling of the agreement and an analysis that we've done of a line item by line item analysis of the move from CUSMA to WTO tariffs really undercuts the argument of the benefit of the agreement for Canadians. So I think as we get more of an understanding of the value of CUSMA, we may have a reappraisal as to whether or not we can live without it. And the data seems to show clearly that we can. The loss of the certainty that the agreement gave us shows that we, as you said, may have no choice and be forced to look elsewhere. That modeling work is available. It was done 7 years ago by Dan Chiriak. The new line item by line item analysis that we've done in Canada West will be done whenever I stop traveling to Toronto.
Thank you, Carlo. Let's pivot, as it were. There's more to be said, and there will be time for questions, and I'm sure this will generate a lot of questions. I know Solange is in the audience. We definitely will want to call on Solange for her point of view on this, given her expertise in Mexico, Mexican foreign policy. So we will come back for that and include you in that. John, let's Trump is one of the elephants in the room. It's not even an elephant anymore. And China, we've talked about China. And you've spent a lot of time at your firm looking at Chinese economic activities in the region. Could you talk a little bit about how deeply entrenched China is and where you think are going to be the key drivers on U.S. foreign policy vis-a-vis China? And if I can add something on top of that, how should Canadians be thinking about that, given their own interests and their own abilities?
Great. Well, we're all aware, I mean, we've discussed it today, and certainly if you've listened to remarks by Secretary of State Marco Rubio or even Trump during the campaign, U.S. foreign policy will forever be defined going forward as a, containment of China, if not pushing them back further. And however, we'd be wrong to believe that this is somehow a Trump invention. This has been brewing for 20 years, and it was just a matter of time. If you think about U.S. foreign policy and what defines it, what are the levers, there's really three. There's the U.S. military and their concerns. There's the U.S. political class and the think tanks and others who sort of feed their thinking. And then there's the U.S. corporate interests. And the U.S. military has been raising alarm bells about China's growing naval capabilities and all kinds of their technical capabilities and their reach and their building of military infrastructure in other countries for quite some time. There's been a political class that's being divided. It's either being people who had a sort of benevolent view of China, but then there's been others who have also been sounding the alarm. What has changed is the U.S. corporate mindset. For years, U.S. corporations were hesitant to criticize China because the promise of China as a market was always something in the back of their minds, and they didn't want to cut themselves off from that market. But industry after industry has discovered that the Chinese market is not winnable for them. And at the same time, Chinese competitors are now encroaching on regions of the world that the U.S. have relied upon as their own markets. And Latin America, of course, is one of that. And so now U.S. corporate interests are, okay, enough playing nice with China. We agree, we support an anti-China foreign policy. And so we are seeing that China, over the last 25 years, has moved in different stages into Latin America. It began by trying to secure long-term supply of commodities to keep manufacturing in China going. Manufacturing must work in China. It must be competitive either through cheap inputs, cheap logistics, and a cheap currency, because if Chinese people are made unemployed, then political risk rises in China. There is a unwritten contract as a Chinese citizen that you will put up with an encroachment on your individual rights, so long as your economic future is secure and that your children have even greater opportunity than you have. You take that away, and tolerance for Chinese government tactics goes away as well. So China then moved, China's next big play was after the financial crisis, they had to create, and they did create, the world's largest engineering economy in the world, built massive infrastructure across China, indebted China to record levels, couldn't keep those people employed, so they invented Belt and Road. Belt and Road is basically to keep Chinese people employed in other parts of the world. And Latin America was a part of that. And that included building ports and railways so that those commodities coming out of Latin America could more economically reach China. And then China moved from being a maquiladora to developing its own brands. They have 50 car companies in China today, but they can't seem to sell those products very easily in rich markets, so they look to middle-income markets. And so Latin America becomes important for that. And then the digital economy. And throughout this process of expansion, which has really been based upon satisfying needs in China, the U.S. now perceives certain areas of threat. One is Panama. And the reason Panama is important that if somehow, and it remains to be seen if this is really viable, if the Chinese can close the Panamanian port, then half of the U.S. naval military assets are kept out of play of the Pacific theater. So if China invades Taiwan, half of the U.S.'s naval capabilities cannot address that problem because they're on the Atlantic Ocean. The same goes for Chinese expansion into Caribbean ports. Another, of course, we've talked a little bit about the innovation war. Well, at the bottom of that supply chain are key critical minerals, and we'll get into this more, but lithium, copper, rare earths, and nickel being the key ones. Those who control the supply of those and the purchase of those will control this future economy. Another is supply chain, and this is where Mexico comes into play. And the ability of Chinese suppliers, particularly of digital goods, of computer products that go into electronic vehicles and other, where the digital economy and the physical economy come together in products that we use and can be used to monitor our behavior, monitor our activity, collect data on us. These are all things that worry the U.S. administration. The ports, there are 40 ports in Latin America and the Caribbean where the Chinese have a presence. It doesn't mean they control those ports because a typical port has multiple terminals and multiple terminal operators, but they're there, which means that they can monitor the import and export of goods and know what's going in and out. And then just digital commerce in general. Chinese companies are winning in digital commerce in Latin America. 7 out of the 10 top websites in Brazil are Chinese owned. The U.S. is way behind. Amazon, yes, is a presence, but the many Chinese e-commerce sites are collectively much bigger than Amazon in Latin America, with the exception maybe of Mexico. So those are areas of deep concern by the Americans. What might they do? Well, we're seeing what they want to do in Panama. We're seeing what one of the asks they want out of Mexico is to take the Chinese out of the supply chain. We haven't seen much movement on critical minerals, and that is definitely an area where Canada can play a role in terms of helping to secure those. And, on ports, you're seeing really misinformed threats coming out of Washington, saying things like, well, if any product comes through Chancay port in Peru, we won't accept it into the U.S. That doesn't really speak to the economics of a port. That speaks to the economics of a product and of trade. So there's still a lot of misinformation around there, but certainly, Canada will be crucial on the critical minerals, and I know we're going to delve into that a little bit more.
Thanks so much, John. We're going to turn over to Ulla now to start talking a little bit about some other things that you're looking at right now in terms of risks. Obviously, your clients are strategic investors, and they're looking at operators across the region. So if you could speak to a little bit, what other risks are you looking at in the region, and what are the main ones that you would highlight?
Mm-hmm. Sure. Thank you, Marta. Yep, you can hear me now. I would like to highlight 3 risks, and I would prioritize them as they are. No, I think the first one is really political stability and the lack of the regulatory bodies being able to act in the region. What am I referring to this? There's been, in most of these countries, there's a pendulum that swings from the right to the left. There's a lack of a center. There are some outliers, of course, like Chile, but this has been a trend for the last 10, 15 years. I would say there's been a decrease in democratization in the region, right? And with that, what's happened is that the regulatory bodies are being weakened. In some countries like Mexico, there are regulatory bodies which are now being abolished. This is something that the ex-president AMLO began and which Sheinbaum is very much determined to continue. What has that ended up doing? There are, for instance, a telecoms regulatory body no longer will exist. Neither will the Transparency Commission, the INAI, which for us as investigators is a big source of information on government contracts, government touch points of companies. And this is a very worrying trend and something which we think will affect companies operating in the region. The second one that I would like to point out is being poorly positioned in this global trade war, which looks like is going to start, right? There are countries like Mexico which probably don't have a choice. Where are they going to stand with the United States or with China? There, the decision has basically been taken for Mexico. But in the region, each country will have to take their own position, and they will have to look at their trade with China and their trade with the US and see how are they going to position themselves. We also have to realize the timing of this trade war is very, very critical. Most of these countries are still recuperating from the COVID pandemic. And combined with the first risk that I just highlighted, the fragility of many of these countries make the timing of the trade war very, very worrying. Last, the third risk I would like to highlight is security. It's an old one, but there have been new developments in the last years. Many of the organized criminal groups that operate in the region have internationalized. They're more sophisticated, they're better organized, and they do present a large risk to the companies that operate in the region. We'll speak about this more a little bit later, but I would just like to bring to you one data point, which I found very interesting. Latin America has about 10% of the world population. However, it holds 40 of the 50 cities with the highest homicide rates in the world. And about half of those homicides are related to organized criminal group activity.
So how's everybody feeling?
Exactly, sorry.
Did anybody want to add so far to anything that's been said before we move on down south a bit? You want to go ahead, Eduardo, jump in.
There's been a lot of discussion of how the U.S. has been essentially the underwriter of global trade. Its ships patrol the oceans, and they provide the funding for the organizations that keep global trade funding flowing, etc. I think there's another element here. The importance the U.S. has played in underpinning the functioning of the global financial sector. It is by far the largest contributor for organizations such as the IMF. That means that for the better part of the last 30 years, we had a change in how global finance worked. Before the Brady bonds were issued in the 90s, you did not have such a thing as emerging market bonds. That backstop the IMF provided, along with the globalization of trade, provided a growth in activity in the emerging world. The U.S. pulled out of the World Health Organization a few days ago. One question which we have to think as a risk is that the last organization the U.S. pulls the funding for, or are there more coming? Is the U.S. going to continue to fund the IMF and the World Bank as backstops for global risk pricing? If that's not the case, then the pricing of global interest rates is going to change. You will no longer have the assumption of a 40% loss given default. And that means you have a whole repricing of how interest rates around the planet work and how the hurdle rate of every investment works. In that regard, I will also put on my my happy hat, because I think one of the things that has changed in some countries in Latin America is that with the introduction of fully funded pension system, which essentially are captive investors, you do have an important risk mitigant in many of the countries in the region, which should help buffer the shock to the region compared to many other parts of the world.
Thank you. So, did you want to start? Okay, let's move to Brazil.
We're moving to Brazil?
Yeah. Well, we've foreclosed a number of countries already. I don't even know. We just got to keep going down. Well, I'll stop in Colombia myself, but Jonathan, Brazil posted a 3%, I think, growth last year. The real was, however, one of the worst performing currencies. What's going on in the mind of investors in Brazil? What's your view?
Well, I think you asked the question precisely correctly. What's going on in the minds of Brazilian investors? Because I think that's very different than what's going on to the mind of North American investors. And I think that's the nub of the question. So despite the fact that the standards for fiscal probity have dropped rather dramatically, if you look at the US, Canada, the UK, there's not much gap really between the fiscal management in any of these developed countries and Brazil. But there's a psychological dimension that makes Brazil vulnerable to being clobbered like it's been clobbered. But it's been clobbered mainly by Brazilians. It's been clobbered by Faria Lima, Bay Street, Wall Street, and of Brazil. And I'll try to explain why. So if you look objectively at the fiscal management, you look at the monetary management in Brazil, it is bad, but it's not very bad. And so I think this is largely a political phenomenon where the main financial actors in Brazil kind of got used to what good looks like under Bolsonaro. Now, I'm not saying Bolsonaro was a great president, but I am saying that there was this sort of sense of momentum towards the kinds of things, even under Temer also, with practically no political base, towards things that felt really good. Labor reform, administrative reform, a absolute solidification of the independence of the central bank, all these things. And now there was a sort of understanding in Faria Lima that Lula was likely to come back, but that he was the old Lula, the Lula of 2002. And I think he's not. That's not to say that he's off the deep end, but he's not the Lula that they thought he was. And so having tasted the smorgasbord of good policy under Bolsonaro, and Guedes in particular, and then being confronted with a balancing back towards a social agenda on top of an economic agenda, and some could even say predominating the agenda, the market punished and punished and punished. And that's when you've seen the currency get killed and the DIs go, the interest rates go up. So that's the first thing you need to understand. The second thing is, however, that, I should say incidentally that if you look at the real rates that are implied by the market perceptions in Brazil, they're treating essentially Lula today in 25 like they treated Dilma in 15. And, I think we remember what Dilma was like. I don't think this is not the same thing. The question is where we go from here. And you've already seen the real begin to strengthen a little bit. That probably has much more to do with Donald Trump than it has to do with Lula. But I think from here, I think there's going to be a reassessment because the government is continuing more or less down the same path it was before. It'll have a negative 0.5% of GDP primary deficit, which is bad, but again, not very bad. It will probably not have a fiscal deficit larger than 9% of GDP. And most importantly, the central bank continues to do the right thing. Now, that means raising interest rates over and over again, but that independence is still solid. So I guess what I'm saying is it's like I'm trying to herald mediocrity and trying to avoid the overemphasis that you get, on the negativity that you're getting from Brazilian investors. Am I saying that Brazil's a great bet? I don't know. At a real of 5.85? Maybe. Maybe it is. So arbing those local and international dynamics is an important dimension of investing in Brazil, and you're in the middle of it now.
Thanks, Jonathan. We're going to go next door to Brazil now, and I'm going to invite John and or Eduardo to pipe in here. So in Argentina, Milei, there's been a lot of talk of Milei, but inflation has decreased. And I'm just wondering if you could, I'll invite John to speak first, or Eduardo. Fantastic. Okay. Eduardo, if you want to speak a bit to the Argentine peso and where you think that is, like, maybe you have a crystal ball. Will it work? Will it last?
The Argentine one is particularly difficult to get right. But I think Milei is doing a lot of the right things that need to be done. Argentina arguably had the most spectacular economic collapse of the past 400 years in the planet. In 1970s, it was an economy larger than Mexico's, an income per capita 60 years ago that was similar to Canada's. If, for example, we look at the Global Wealth Report published by Allianz, the average US citizen has 250,000 euros of net assets. The average Canadian, 120. The average Argentine has about $1,500. So enough money to spend a night in a very fancy hotel in San Miguel Allende. So they needed a critical, like a shock theory. They've been doing the fiscal adjustments. They've been cutting entitlements. I think Milei has been doing a lot of the medicine that was necessary. For me, the big question is there runway long enough so that he can finish delivering the things which are missing before you have a social collapse and his support coalition implodes? I think maybe the biggest mistake he has made so far, and I think Macri did it as well, is not resolving the issue of the pension system. If you don't solve the issue of the pension system, you don't have a captive investor base. And if you don't have a captive investor base, whenever uncertainty rises, the last person out of the room switches off the lights. And I think the big question is, will Milei's reforms start to deliver benefits to the average Argentine, offsetting the pain that they've already gone through before things get ugly? But so far, he remains a darling of the region. He also, I think, is one of the two leaders in the hemisphere which has been spared the anger of the new president in the United States, so that reduces the uncertainty that the Argentine peso will go through for the next few days, so for the next few months. So I think we have a few months left of happiness. Whether that lasts into 2026 and beyond is, I think, anybody's guess.
Yeah, just briefly to add, everyone should be on the lookout for when will Argentina really liberate the last of the currency controls, because when that happens, and they'll have to do it in a way that ushers in money into the country without necessarily opening the door for personal monies going out. Because there's a lot of big funds around the world that would love to invest in Argentine assets, but by their own governance rules, they cannot because it's a control currency, and certainly removing those controls would bring in a lot more money. The promise of dollarization is still there. I think, and it's not my specialty, but my understanding is there's not enough reserves yet to sort of backstop that, but they're certainly getting there. And further to what Eduardo said, Milei is very bullish and he really understands that he needs to accelerate the development of dollar-generating export businesses, which, they're world-class leaders in agriculture, but mining and energy are the two areas where they're going to get quickest to bringing in more dollars. So that's key. The problem is none of those industries create jobs in the cities of any significance. So how many people can you put out of work by further cutting government spending, et cetera, and leave unemployed without finding jobs for them? So this is the race against time that he's under. The stakes are big, well beyond Argentina. If this works, then this ignites a libertarian movement in Brazil, in Chile, possibly in Colombia the next political cycle. Countries where there are bloated governments, where there are high debt levels, and in a world of higher inflation and higher interest rates, the economic pressures on Latin American countries with high debt levels will be even greater. And if the most, as you put it, the most disastrous case was able to turn itself around, then for everyone else, it's also viable. So and I'm pretty sure that Milei is making that case to Trump to sort of say, if you want more people like me and Bukele running countries in Latin America, you need to make sure my experiment works. Now, to what degree the Americans are willing to backstop or strong-arm lenders to make sure they're rolling over their loans to Argentina or whatever else the Americans can do remains to be seen. But that's what's at play. This is not just about Argentina. This is about that political pendulum in Latin America.
I just wanted to add that this dimension, which we have never thought about as investors, as capital investors in the region, this dimension of a government strong-arming rollovers is like almost was unthinkable 20 years ago. It wouldn't even occur to you. And I just think that, let's face it, market phenomena are all about cues and symbols and momentum. And sure enough, if that actually happened, you can be darn sure that a lot of investors, it becomes a self-fulfilling prophecy, I guess is my point. A lot of investors say, hey, and that will cement this mercantilism like that in the region. You make a very good point.
Thank you. Ulla, I want to come back to you. You talked a little bit about the increasing risks, amongst others, but with organized crime. And there are there's many questions to have around this, but one of them is maybe you have some concrete examples of how that is affecting your clients. And I guess more importantly is, are you at the point now where you're seeing crime in some countries, and you can even name where they might be, it is at such a level that is affecting the investment decisions that your foreign clients are taking about whether or not or how to invest in those countries?
So I have the rest of the afternoon to answer?
Yeah, no, actually you do. Yes, go ahead.
No, I'll try to be concise. Security issues are definitely, and organized criminal activity is definitely affecting our clients, especially who have bricks and mortar kind of investments in the region. I would divide, if we look at the problematics that our clients come to us and asking for help for, into three buckets. First of all, it's infiltration of the workforce by members of organized criminal groups, or, if you look at places like Mexico, most workers in some of these towns, if they don't know somebody in organized crime, maybe it's their brother, maybe it's their cousin, etc. What happens, especially this happens at blue collar level workers, they become part of the workforce of international companies operating in these countries. They collect intelligence and information. What do they use it for? It could be used for transport robbery, theft, acting against executives, extortion, and not to even speak about kidnap and ransom. So it is an issue, and it is something that our clients are asking for help with on a continuous basis. The second one is really the infiltration of supply chains. So this is happening more and more as well as the organized criminal groups are becoming more sophisticated. So what do? They, for instance, create a transport company, trucking company, or they go to an existing supplier and say, you know what, you're going to sell your trucking company to me now, right? And then they go to the purchasing department and say, okay, so all trucking of your company is now going to happen through me. Otherwise, if you don't give me this contract, your family, somebody's going to get hurt, right? So what does the purchasing officer do? They give the contract and nobody finds out until you start to audit. And this, in the last 6 months, we've probably had one case a month where internal auditors start to conduct a standard audit into a supplier, let's say maintenance contract of 100 of air conditioning units in your plant. They start to do what auditors do, and then suddenly they get a telephone call, they get an email, they're stopped on the road when they leave the company in the evening, and they're told, stop looking into vendor X, okay? Otherwise, again, somebody's gonna be hurt. What do? Right? You can't just bend and say, okay, we're not gonna look at this and we're just gonna let it go. And that's when they find out that actually their supply chain has been infiltrated. And thirdly, payment of protection money to organized criminal groups. In Mexico, it's called cobro de piso. Ecuador, they call it the vacuna. So you get the vaccine. And this is something which in certain industries, in certain areas, for instance, if you look at mining, happens almost without a doubt. This, of course, with Trump's presidential decree of saying that many of these cartels and many of these organized criminal groups will now be identified as terrorist organizations. Of course, companies have to be very concerned that they will not be accused of financing these terrorist organizations, right? If you look at places like Mexico, 10 years ago, actually the probability of you operating in the country and coming face to face with an organized criminal group was rather low, right? Today, it's not a question of if, it's a question of when, how, and with who, okay? So it is a risk, right? And again, I don't want to scare everybody away. And to answer to Ken's second part of the question, how much is this affecting decisions of businesses who are looking to operate in Latin America? And you may be surprised, my answer is very little, okay? Why? Because security risks can be mitigated, okay? And their outcome very rarely is catastrophic. So AmCham did a survey in Latin America on how much companies are spending on security on average, and it's 6 to 8% of their annual budgets, which is pretty high. But that means if you do your homework, security risks can be mitigated and you can operate in a safe manner in Latin America, whereas some other risks, let's say a local community closes your mine for 6 months, the results are pretty catastrophic. If you're Constellation Brands and you're suddenly told, okay, there is no water in this area, you're going to have to move your plant to another area of the country, that's pretty catastrophic. So again, security risks are worrisome. And of course, if you suffer, let's say, a kidnap and ransom event or something of sorts, of course, it impacts operations. But in the big picture, it's not catastrophic.
You brought up mining. We're going to switch over to exactly that. So, John, in terms of, Canadian mining is obviously one of those sectors that's going to continuously be across Latin America, and particularly right now with the conversations about critical minerals. So let's talk about opportunities, taking into account the risks, but do you foresee Canadian mining interest in Latin America? How do you see those going, particularly if you also bring in the geopolitical aspects of the conversations between the U.S. and China as well?
Well, I think, Canadian miners and satisfying their shareholders, the geopolitics of critical minerals has not, it might have been a nice story in terms of, okay, demand is going to be strong for copper, demand is going to be strong for lithium, rare earths for nickel, and therefore if we're mining those, that looks good and that helps our share price. But they have not, until very recently, been asked to take part in a new strategy to help present Canada as a key partner to the United States and as an indispensable partner, because Canada has far more mining interests and far more mining capabilities to go after those critical minerals than the U.S. mining industry does, for instance. That said, the Canadians are not as strong in critical minerals as they are in other minerals, and perhaps with the exception of nickel and to some degree copper, but they're not as strong, they're not as dominant in lithium, they're not as dominant in rare earths as they are in other minerals. My understanding from talking to leading lawyers here in Toronto is they're a little bit a little bit depressed about the fact that in their eyes, Canadian mining, as in terms of its leadership, in terms of Canadian capital markets' ability to attract mining investments, is not as predominant as it was 10 years ago. It has slipped. But at the end of the day, with the new geopolitical strategy being, let's show the Americans that we can really help them push China out of supply chains, particularly in this innovation war, and make sure that we can secure those critical minerals. That's certainly a role that Canada can play. Now, the problem to that is if you do go and open a lithium mine and start selling lithium, who are your customers? Well, the majority of your customers are going to be Chinese. So if the Americans say, we'll provide funding to you, Canadian mining company, to go mine lithium in Argentina, but you have to sell all of that lithium back into the US, and this is back to the bifurcated mercantile world, you might be getting less money for your lithium than you would if you sold it into Chinese supply chain. And so that calculation is going on right now in the minds and in the leadership of mining companies to say, how are we going to make this work? Because mining was the ultimate, along with energy, the ultimate fungible commodity that you could sell anywhere. And so this is a challenge to Canadian mining, but I think that whoever leads Ottawa when this comes up, when this bubbles up as an issue in Washington, would be smart to work closely with Canadian mining companies and press that case that Canada can help the U.S. and try to figure out the details later, because that's really what's needed now. But this new potentially bifurcated world where the Chinese are developing solar, energy storage, electric vehicles, electronics that require critical minerals, and the U.S. and sort of a loose collection of allies are trying to catch up to the Chinese in these industries because we're way behind, is going to be a big driver of mining decision-making and how mines are developed and who their customer base is, and even how our products are priced in future. So it's a whole new world.
If I could just add one dimension to this, which adds even more complication, and that is the Chinese government, of course, is entirely aware of this potential for there to be a U.S. supply chain that becomes more robust and not so reliant upon itself. What they do, however, is they manipulate the price of these minerals by hoarding them and dropping them on the market at exactly the moment when somebody's looking for an economic return from activities in the West. And I cannot tell you the number of operators who have told me, without some de-risking, non-market de-risking for a broad scope of players in this space on critical minerals, our own system, which is a better system called capitalism, works against us. And so I think one thing we need to face is that we may actually find that the economics will diminish because of this bifurcation and because of the militarization, if you will, of these minerals in this innovation war as they get sort of dragooned into it. And so the margins might actually decline because the risks of getting overwhelmed by supply by China is still very present.
Eduardo, did you want to jump in on that at all?
Sure. Sorry. I'm very much on the Jonathan camp that we're going to see the way geopolitics affects the supply chains around the world massively. But there's another side to that, which I think when we move into a world which is structurally deglobalizing, when you go into a world where growth globally starts slowing, hurdle rates for capital start rising, and things like that start occurring, I think that's one of the factors that's going to slow demand for everything. I think we're in many ways going to go back to the world I lived when I was younger, when you open a closet and there was 2 pairs of trousers and 4 shirts, and living rooms were never refurbished, and cars were expected to last for 20 years. I think that world of there's 2 things that happen when the world is globalizing. The first one is supply chains become optimized. Costs fall, inflation falls, competition rises, markets become larger. When markets become larger, you have the number of consumers that you spread innovation between start to increase. And the periods when we've had big globalization in the world have been periods of huge growth and innovation. 100 years ago, we went from moving in with the wind and horses to planes, trains, electricity, power, telephones, telegraph, penicillin. A financial panic and a shadow banking system crisis in 1907 with a huge role played by a private sector player, and the last globalized concerted effort stepped in. We started a process of deglobalization. With that, innovation started slowing. A pandemic changed the social contract and was one of the triggers for a rise in populism and a change in the global order. This time around, we went from an economy where 25% of the global economy was trade. It went up to 63. We had a shadow banking financial crisis. Again, the last time that the great powers of the world played together as one team. We had a pandemic that changed or is in the process of changing the social contract. A deglobalization trend that has seen global trade fall from over 63% of global GDP to under 47% falling. A rise of populism, nationalism, mercantilism. And with that, I think we're going to have one. I guess there's good news in this. The world needs a little bit of a rest for the environment. We need to slow this rapid rise in how humans consume, and that can be one of the factors that offsets the need. Everything that's produced in a supply chain includes minerals and raw materials, and that can be one of the things that kind of offsets that trend. But it's going to be a long-term trend, like it's already been playing out for the last 20 years or so.
Great, Eduardo. For a bit of good news, it's I don't know if people follow, but Neymar is going back to his boyhood club in Santos, and he's healthy to play again. So that's just a bit of the good news. That really hasn't come out yet, and I just thought it would be a good time to interject that. There are some elections coming up this year. If I'm not mistaken, Chile, Bolivia, and Ecuador. Every time I turn to Ulla, sort of like, tell us the horrible stories about crime and et cetera, et cetera. Colombia is not till the following year, but the jockeying will already started, but will start in earnest in March, when those who are holding government offices will have to step down. In fact, if they want to put themselves forward in the presidential election, and we expect some of that will happen. And we actually haven't touched upon here, and I suppose we could in the question and answer period, the contretemps between the president of Colombia and the president of the United States. I guess that's fair game for a question, but I'm not going to ask that question now. Well, I'm going to ask, in those countries that have elections, the saturation of organized crime, cartel crime, whatever word we want to use, is of varying levels, but it's in all of them. Do you want to talk a little bit about how you think that might play out in each of those countries during the course of the election?
Sure. I think in all 3 countries, security is really on the agenda. As it's been in recent elections on the entire continent. No, people are tired of insecurity, and people want governments who come with solutions. Right. What's happened is, specifically in those 3 countries, security has deteriorated significantly. If you look at Chile, again, I come back to homicide rates. They've doubled in the last 10 years. If you still compare them with the rest of Latin America, doesn't look that bad. But if you compare Chile with Chile, there's certainly a deterioration. Ecuador has gone through, being a relatively safe country to a very, very complex situation currently. And what's affected all these countries is, and I'm very sad to say this because I feel I'm Mexican at heart, even if I'm Finnish by birth, the Mexican cartels are the most sophisticated on the continent. And the two most powerful cartels, Sinaloa and the Cartel de Jalisco Nueva Generación, which is from the state of Jalisco, they have realized that internationalization is the way. Diversification of their activities is the way. So what have they done? They've gone to Ecuador, for instance, where they fight for manufacturing of cocaine, in neighboring Bolivia as well, controlling the warehouses, controlling access to the Panama Canal, controlling access to ports. They launder money through the poorly controlled banking system. They use, so the local Ecuadorian cartels are also into illegal mining of gold, which of course is great if you're a cartel and you're looking to launder money. So they have allied and partnered with the cartels or the local gangs, let's put it that way, down there. There's also a new player, relatively new player, which is Tren de Aragua, which also makes the list of Trump. So it's a organized criminal group which was born in the Venezuelan jail. They have now antennas almost everywhere on the continent. They have a very different way of operating, but they ally with local smaller gangs. Some call them like consultants of crime because they go in, they give the local gangs intelligence, they help them train, etc. They do this consulting work, and in exchange, they're allowed to operate in their territory. There's been Tren de Aragua individuals as well arrested in the U.S. lately, so they are everywhere, including Chile. And that's one of the reasons why Chile has such an issue with security. For instance, from our point of view as control risk, Chile is a place where one of the few places that we were never doing kidnap and ransom exercises, right? Because it was not an issue. Today, we have more and more clients who are approaching us to train the individuals that are working in Chile. We had a recent case with a gold mine in Chile, 4 trucks, Suburbans turned up with heavily armed individuals, and they conducted a theft of the gold, right? This was in a remote area where it took days even for some officials to turn up. But these are incidents that didn't happen even 5 years ago. It is a very changing landscape. And again, coming back to your question, this is the reason why security is so high on the list of priorities for contenders in the upcoming elections in each of these countries.
Can I just add something about Bolivia, which I think of the 3 elections is probably the most surprising in terms of how it's where the polling's going. For years, we Bolivians and the rest of the world just was resigned to the fact that the MAS party was the forever party, and when Evo Morales had to give up the presidency and Arce came in, it was assumed that Arce would be able to continue because the MAS was a truly grassroots political party with really good entrenched control throughout the country. But basically it's been a unarmed civil war for the last year between Arce and Morales over the leadership of the MAS, and as a backdrop to this, Bolivia was one of the last countries in Latin America that had a tightly controlled currency. And it was always assumed that the currency could be defended because they had this massive surplus of natural gas sales that they were able to sustain. But when the national government basically nationalized national gas and didn't invest enough in it, that energy surplus turned into an energy deficit when you take into account the import of gasoline. And so their reserves have been dwindling, and they've been doing whatever they can. Arce is doing whatever he can to avoid a massive devaluation of the currency before the election this summer. But in doing so has made it impossible for importers and exporters to work. And that only strengthens the position of illicit businesses that can get their hand, that are liquid businesses, and therefore have, in a capital-starved country, become that much more powerful. We may, at this point, Manfred Reyes is polling about 38%, well ahead of both Arce and Evo Morales. And as a result, we may see Bolivia shift to the right. Now, why is that important? It's important because Bolivia sits on 22% of the world's lithium deposits and hasn't been able to mine an ounce of it because the government decided they were going to monopolize that business, and they don't have the capital and they don't have the know-how to do it. And without private investment in lithium, it hasn't gone anywhere. And a change in government may open up Bolivia to its true lithium mining potential, and that would be very interesting.
Thank you. I think maybe just one final question, quick question, quick because we want to leave some time for questions and answers. But go ahead, Marta, do you want to?
I just want to bring up there's an election in Canada coming up. And I'd love to sort of hear what I'll bring this to either, I'll ask you, Eduardo. So Canada will have a new prime minister within this year, and almost certainly from Alberta. So I just want to sort of get your take on what you might anticipate that would look like for the energy sector, particularly, and also with respect to trade and bringing it back to sort of the North America question in terms of the U.S. and Mexico. So do you want to opine on that?
I think there's several forces which are going to be playing a positive role for the energy sector in North America. In the U.S., you have the election results opening up different sectors of the energy sector there. You'll have it. Possibly, it looks like we're going to have a similar almost deregulation or elimination of barriers for some pockets of the energy sector here as well. In Mexico, it will also happen for different reasons. The stretched fiscal position of the Mexican government means that even though the country went materially backwards in the flexibility they had, by reversing the 2013 reform, you can no longer so easily become a self-generation player. But when you also have the fact that you now have your credit ratings start to come under pressure, where your fiscal deficit rose from 3% of GDP to 6% of GDP, the government cannot go at it alone. So I would not be surprised if in the NAFTA negotiations, energy becomes a player. The Republican Party, it looks right now that the Canadian government also will be pushing for opening up the energy sector in the region, including Mexico, for private players. And it brings me back to something I had to do when I was starting my career in the government. The PDRegas were a mechanism through which private players could invest in the power sector. It's an expensive mechanism compared to outright direct operation by the private sector. And I think because of the legal complexities of those mechanisms, and because in emerging worlds the recourse to international arbitration is so valuable, and because USMCA has an expiry date 10 years from 2026, Canada will also likely play a role in that. If you're a company doing a 20-year investment, do you really want your dispute mechanism to have an expiry date 10 years down the line? Or do you want to also have recourse to, for example, CPTPP, which does not have an expiry date? So I think elections throughout the region, fiscal dynamics, and those things are going to open up opportunities for private sector players.
Thank you, Eduardo. Thank you, everybody, for being so patient. We have some time for questions and comments. There's a microphone here. But Solange, did you have the honor? Would you like to say anything about what you've heard so far?
Thank you. No, thank you, Ken, and everyone. Completely agree with what you said, especially about Mexico. Something that I think we need to take into account when we analyze what is happening in the region is that some of the governments take their decisions because of political interest, of course. In the case of Mexico, for example, what is my principal worried about the decisions related to what is going to happen to the relation with the United States is that now the government is more ideological. And as soon as they start to be more in the ideological front, it is not just Mexico, it happens in all the other countries. They start to lose the interest for the economic reasons. they start to be more interested on the political and electoral front. And decisions that we might think should be logical in the economic front are not logical for them in the political and electoral front. So that is something that always I see in different analyses. Is something that we do not take into account, and it ended in a surprise. Like, for example, in the case of AMLO in the last in his term. These decisions of taking over the judicial power, everyone was like, at the beginning was surprised and said, well, it will not be like that. It will not be that bad. And in the end, it was. And it will be worse because of this. They are not interested on creating an environment that attracts investment. If that can affect them in the electoral and political front. So that is my only thing. Thank you, everyone, and thank you, Ken and Marta.
Thank you. I closed my eyes for a second, and I imagined I was back in Colombia with that conversation about ideology over economic decisions. Carlo, you have your hand up. Did you want to say something, John? Okay.
I just wanted to answer to Solange. I think I fully agree with you. I think the constitutional reform where Mexico is going, including the judicial reform, is frightening from a business point of view. There is hope, maybe, because most of those reforms are against the USMCA. They are in breach of. And the hope of many operating in Mexico is that that renegotiation will lift those to the table and say, okay, you're going to have to choose. No? And they may have to backtrack on some of them. I'm not saying they will be erased, but that's the hope.
Carlo.
And then Andrew, I saw you have your hand up as well. So on the energy front, in Western Canada, we're starting to see risk as much or more so than opportunities in what Trump's doing in the U.S. We've been selling this hard with the Americans, most deeply involved in talking to them on the energy front, including Premier Smith directly with Donald Trump. They're not buying the economic arguments, the win-win economic arguments. They're also not buying the North America fighting China, energy North America arguments. They're also betraying elements of promises made by the America First movement, groups like American Compass. So this appears to be elements of the America First movement that are convinced U.S. energy dominance means U.S. energy dominance, not Canada helping the U.S. to energy dominance. This has become ideological. It's completely left the realm, I think, of economics. The one good sign we see is the AI push and the demand for energy from data centers as being the one bright spot in this. Trump cannot increase oil production in the U.S. He cannot increase natural gas production. They've already opened up leases on federal land. We have more unused leases, more unused drilling leases or drilling permits than the Americans can handle. But the AI and the data centers, the push for demand for electricity and power for those is the one potential bright spot in the U.S. for us.
Very interesting. Thank you. Andrew.
Yeah, there have been a number of comments that have sort of gone around what seems to me to be the missing piece in talking about the, if I could call it the Trump revolution so far. Part of the ideological claim is what has been talked about in attacking China, its foreign policy and the rest of it, but the other piece of it is the denial of science and the ignoring of everything that has to do with the biggest problem we have and we're facing on the planet over the next years of what happens if we don't get control of what we're doing to the climate. And we've been talking around the edge, but I'd like to hear some more of the panelists' opinion about this. And there are sort of two elements that particularly concern me, I think. The first of them is by abandoning the stage of saying, no, we're not going to do anything about climate change, the U.S. is just abandoning a major portion of its battle with China. Because China is so bloody far ahead in everything that has to do with developing an energy alternative that all of those precious metals and the lithium and everything else will be going to China because they'll be the ones who need it and are producing for it and are selling around the world and are winning friends everywhere, where the second thing that I think is important that happens, which is what happens as the cost of disasters goes up and up and up, not just as it has in the last little while in the United States, or 2 years ago here with the forest fires in Canada, but across the board, as it is going on, and we're kind of ignoring it. It used to be a big issue, but if you start tracking it, it's getting bigger and bigger every year, the number of disasters and the number of effects and the cost of running this. And that's a huge economic cost. And the mechanism for paying for it for most countries in the world has been through international humanitarian aid. And that's the other piece that's being attacked. So I'm just wondering, any comments about this on where we go with this economically?
Can I try this?
Yeah.
It's a great point. The most of our efforts to combat this, whether it's the Paris Accord or others, is to try to curtail conventional energy and its use. But at the same time, because of AI, because of data centers, because of climate change and the use of more air conditioning around the world, electricity demand is now growing at twice the rate that it was just 15 years ago. So those are two incompatible goals. What is happening is the countries that have access to conventional energy will continue to tap them at full speed, but it still won't be enough to satisfy this new electricity need. So the brighter side of that coin is that countries around the world, particularly Asian countries, but also in places like Latin America, are developing renewables at such a pace that we're now at a point where you can produce electricity through renewables at far less than you can with oil or gas. The problem is storage and transmission. But the more that there's investment in those areas, the more the variable cost of those comes down. And we're already seeing the change. And the change won't be mandated by penalizing conventionals. The change will come from technology advancement and economies of scale that make renewables more viable. And it will be happening in countries like the Caribbean, Brazil, Chile, Central America. It won't be happening in Argentina. It won't be happening in Colombia. It won't be happening in Venezuela or Ecuador. But it will be happening in those countries that do not have an abundance of. But you're right. The other factor is insurance, right? So the cost of insuring assets, the cost of insuring projects that are vulnerable to extreme temperatures, to extreme weather, will go up and up and up, and that will be that's the market trigger of change of behavior. But I don't see clearly the time of international accords and international agreements. We don't have that unless a truly catastrophic global event happens that changes that mindset. But I don't see us policing our way out of this. I see us market forces driving our changes in our behavior.
Hi, Paula Sad from the Brazil-Canada Chamber of Commerce. Just would like to know if the panel has any insights in terms of the Mercosur, the negotiations, if they're still stalled or they're, looking like they're going to recoup. And also the role of organized crime in Brazil when it comes to industry, and if it's the same as the other countries, because I know they have expanded. So I don't know how that is playing a role in the industries in Brazil. Thank you.
I'm happy to answer the Brazilian organized crime question. It's estimated that there's still, so if you compare the Brazilian organized criminal groups to the Mexicans, the Brazilians are 20 years behind. But the road is the same, right? They're going to get there, and probably at an increased speed. But today, they're still less sophisticated. There are alliances between the major criminal groups, they actually don't call them cartels in Brazil, with the Mexicans, mostly because drugs are passed through there to Africa and then further to Europe and and then there's an interaction with the European mafia. But I spoke before coming here, because I sit in Mexico City, quite far from Sao Paulo. I spoke to my counterpart in Sao Paulo, and he said that they've had rather little work related to organized crime affecting companies' operations or our clients' operations in Brazil, which is a reflection of the situation there.
I think we're at our limit. I know you had another question on Mercosur, but just to have somebody else ask a question. I had this hand first, but if it's really quick and a quick answer, then I'll try and accommodate the question here as well. Go ahead, Robert.
Interested in people's thoughts on the 51st state, Greenland, Panama commentary coming out of the U.S. Is there like a regional imperialist worldview underlying that, or is it just random eye poking?
Yes. Next question.
Maybe I can quickly try to address that. I think this is real. I think there's different shades of real. The Greenland thing is super real. I think we have to change our frame of reference from the conventional perspectives on statecraft and foreign policy, and now think of it more from the point of view of there's the United States, and the United States has its own near abroad, just like Russia does, and the name of the game is this innovation war. And Greenland is chock full of all the stuff that's needed for that innovation war. And as far as the American administration is concerned, they're not doing anything with it. They don't need it. I do. And so I have more military might than they do, so it belongs to me now. Just because we didn't live through a period where these kinds of notions govern the world doesn't mean that they're not part of the architecture of human civilization. They are. Actually, I would say they are the default position. We've lived through the exception. So the Greenland thing is totally real. I think in Canada, it is less about that and more about another preoccupation of this administration, which, by the way, was a preoccupation the last time, but I believe my colleague mentioned that they didn't have their stuff together to start thinking about it more systematically. It was a little bit improvised and extemporaneous. It's not extemporaneous, and it's not at all improvised today. On Canada, it is about a preoccupation about how much does the United States actually have control over key elements of its economy. They've outsourced a lot. They don't feel like they are fully secure in the face of the challenge from China, fully secure, and I think COVID had a big part of it. I think the United States looked around and said, what do you mean we can't get Tylenol? What do you mean we can't get PPE? And it has triggered a very important imperative that we are going to resource into the United States the things that we need to be a proper nation. And I think that's where the tariffs are being used. I'll give you one last thought. Steve Feinberg from Cerberus has just been made this number 2 at the Defense Department. Steve Feinberg, his whole work on Trump number 1 was all about this question of what have we outsourced and what do we need to take back? He even developed a whole fund about it. So this is what's going on. It is as real is.
Just a little side note. The last country that thought seriously about annexing Greenland was Canada. 1917, under Prime Minister Borden, the Commonwealth countries came together in anticipation of the end of the war and in anticipation of the Versailles Treaty and said, what can we grab now? And eventually, that idea was dropped. But that's when, soon after, the Danish sold their Caribbean islands to the U.S., became U.S. Virgin Islands. So, like you said, 1918, the world map was redrawn. And since the Second World War, it's been relatively stable. But we may be going back to that era. Yeah.
Last.
No? Hello? Yes? Okay, hi. Hi, my name is Cynthia Ortiz. I work in the government of Ontario, for the government of Ontario. I help Ontario companies to expand to Latin America. I'm the area director for Latin America. And my companies recently, after everything is happening in the US, are like the small and medium-sized company that initially thought to go after the US are now looking after Latin America as the first country to expand internationally. So that's good news for us, well, for me, because I have a lot of work. But also, they are very curious about the free trade agreement with Ecuador that is like right now in negotiations. I think 5th round of negotiations probably happening soon. So, like, what are your thoughts on that? Like, do you think, like, based on your experience with companies in Ecuador, Canadian companies in Ecuador, like once that this is finalized, this trade agreement, it will be much more attractive to Canadian companies? Wait until the elections happened, security issues. Just curious about Ecuador specifically. Thank you.
John, do you want to answer that and then maybe add in a few other bright spots of what you see in terms of, and we'll end on that. Thank you.
I don't know what the tariff treatment of Canadian products is today pre-agreement with Ecuador, but, Ecuador is a dollarized economy, and therefore it's a pretty stable place to sell to. I would say it's a country that imports a lot of it. Most of it's finished goods, so I think it's a great market. It's a small market, but it's a great market. I don't know about where they are in the negotiations and how much things get, interrupted. I am worried about the Mercosur European trade agreement, and first of all, French farmers are always an issue, but now you've got Trump, who certainly doesn't want any of his negotiation power being taken away. So I think that trade agreement's in trouble. In terms of electricity demand, we talked about is really exciting. Healthcare, Latin America has a 10% growth in healthcare for the next 40 years. If you sell equipment, technology into the healthcare space, it will be a great market. It's the fastest aging population in the world. The population over 60 will literally double over the next 30 years. I hate to, turn a health malady into a business opportunity, but highest rate of diabetes in the world, second highest rates of obesity in the world after the United States. Chronic disease is on the rise. So the amount of healthcare spend per capita in Latin America is going up, and up. Along with those demographics and that aging population is enormous opportunities for financial services, for travel services, for all the things that we worry about and spend money on as we age, which is basically our money and our health, and then how we spend our suddenly free time. So those are all amazing opportunities of growth. And, the other thing would be e-commerce. Latin America will have a higher percentage of e-commerce over all its retail than the United States or Canada 3 years from now. And it will continue to beat them. Why? Because the footprint of conventional retail in Latin America is very weak. And so if you want to buy any product and you don't live in one of 10 of the largest cities in Latin America, you either have to travel to a big city to buy that product or you buy it online. So the footprint of e-commerce will continue to grow at over 10% for the next 15 to 20 years.
I think that draws us to a close. Again, thank you to our panelists. Every year we think it's even better than the previous year, and so I'm going to stick to that. I do believe it was very enlightening. This is a very complicated time, and we all know, and hopefully there's some clarity, or at least a clarity on what some of these issues are and how they may be related. We thank Dentons again for wonderful hosting, and we invite all of you who aren't involved or on our mailing list to please consider to get more engaged with us, and certainly sign up on our mailing list so you can get the announcements for all of our upcoming events. Thank you for coming, everybody, and have a nice rest of your afternoon.